What's up, everybody? Welcome back to Trading Wars. We're here for another educational video. I had one of my subscribers reach out to me and wanted some more information on Fibs, how we use them, what they are, how to draw them. So I'm going to be breaking down Fibs today. And in my opinion, Fibs are one of the most powerful trading tools in the current markets because of algorithms and because of risk management and risk to reward. Okay, so let's get into Fibs and let's break it down. And if you're ready, let's step into the war zone. All right, guys, welcome back. So we're going to be looking at Fibs, and I'm going to start off by explaining the basics of Fibs, what they are. And essentially, a Fibonacci is a trend continuation tool. So what that means is if the market is moving in an upward direction, like so, the Fib is a pullback with the idea that the market will continue in the same direction. So the Fibonacci in itself has different retracement levels. Okay, so let's look at this over here. So with the Fibonacci, you need to have an anchor point and a pivot. Okay, so that's what I'm going to call them, an anchor and a pivot. So if you're going for a long opportunity, the anchor will be at the low and the pivot will be at the high. Okay, and all of these levels here, 236, 382, 50, 618, and 786 are measured retracements of this move. So the 50% is 50% of this move. The 618 is approximately 62% of this move. Okay, so why is this important? Why does this all matter? This matters because algorithms are what dominate the markets in this current setting, and they are programmed to buy pullbacks of moves and trade them to their extensions. Okay, so an algorithm may see an impulsive move in one direction and be programmed to buy the 50% retracement and sell at the 50% extension of that move. Okay, and if I was to mark that up, how would that look like, guys? So let's say we had a 50% entry, and let's say with stop loss was below the 618, getting a lot of pop-ups, and then we take it to the 50% target. Okay, guys, look at how beautiful that risk management is here. So we can have a 5.75, almost 6 risk to reward if this works. Okay, so obviously there's a lot more factors that the algorithms program, but the reason why Fibs are important is because it gives amazing risk to reward, and it's easy to program a robot to do that. And if you study the markets and you watch the markets every day, you'll understand and you'll see that Fibs are constantly being traded. Pullbacks are constantly being traded. And in other terms, other traders may call them higher lows or lower highs, or they might use trend lines to draw. But they are all Fibonacci levels. They are all retracements. And these levels are what you need to know to take your trading to the next level. Okay, so let's look at two specific examples here. So I have a long example here and a short example here. So let me clear these Fibs, okay? And then I'll show you how to draw them. So let's say we had a low over here at 31.72 and a high of 32.05. So before the market starts pulling back, we have the Fib. So I have an example over here as well. I'll show you guys that one after. So we have the low and we have the high drawn. And in this example, we pull right back to the 618, which would be your entry. So we could set up the trade like this, enter over here and put a stop loss at the swing low, and then take it to the 50% extension. Okay, so we have the retracement and the extension. And this is a Fibonacci trade, trend continuation, where we buy the pullback with the expectation to break out and go into new highs. So that's how we look at it from a long perspective. But how will we look at it from a short perspective? So we do the opposite. So we take the swing high, so the highest point before we start pulling back, take it to the point where the market starts to bounce upwards, and then look for these levels to be the next lower high or the next area of resistance or the next pullback for the move for the continuation of the short play. So we would look for an entry here and do the same thing. But in this case, we would short. So we'd enter here with a stop above the swing high, and we would take it to these targets. Okay? So that's Fibs in a nutshell. Trend continuation, they are measured moves, measured retracements. Because why? Because robots are programmed to trade measured retracements and extensions, because the risk management and the payout is so powerful. So even if we take 5 Fib trades and we lose 4 of them and we win this one over here, we're still profitable. That's why this is so powerful. Okay? And what we want to do with Fibs as professional traders is we wait for a signal at these levels, which is a strong candlestick to confirm that, yes, these Fibonacci levels are acting as support and resistance. Okay? So we're going to look at a ton of examples to help this sink in, because that's the only way to really learn it. Okay? And for the Fibs, you just click on this little icon here on TradingView, hit Fibonacci retracement, and then you just draw it like from swing low to swing high. Okay? And then what I do, so let's go into the settings here so you guys can see. What I do is I manually type in the extensions, because you can draw an extension separately, but I like to have my retracement and extensions already in one drawing. So I have 0, 382, 618, 76, 50, 236, 1. This is the standard. And then I add these in: negative 236, negative 50, negative 786, 382, 618, and negative 1. So those are your extensions that pop up. Okay? All right. So let us go into many different examples. And before we go there, I also want to say that Fibs are happening on all time frames: 1 minute chart, 5 minute chart, 15, daily, weekly, hourly, etc. Okay? So this is a strategy that you can use as a day trading, swing trading, investing. It doesn't matter. And I'm going to show you guys examples of that. So let's head into SPY here. So I decided, let's look at a day trading type of lens, and let's look at the last few days, and let's draw the Fibs together. Okay, so this might look pretty crazy, but it's actually pretty straightforward, and you just need some practice to really understand it. Okay, so what we're going to do is we're going to get rid of all these Fibs that I have drawn, and we are going to do them together. Okay, all right. Ooh, I don't want to take out the Bollinger Bands. I like those. Anyways, so June 3rd, let's look at the price action. So we have a gap up. Okay, let me zoom in on here so we can see this better. So there's always going to be multiple Fibs trading in every single day. There's going to be shorts and longs both battling at the same time. And that's why we get choppiness, because we have a short Fib and a long Fib battling each other. And then when one eventually wins, in this case, the long, we have a move. Okay? And there is going to be a Fib that sets up within the first hour of the day for the quick day trade. And there's also going to be a Fib that sets up later in the afternoon for the end of day close. So those are the two that you need to pay attention to. Okay? So let's drop the Fib for the morning in this case. So we wait a few candles. We have to wait probably 20 to 30 minutes till we see some type of range develop. Okay? And in this case, we have this range here. We have the low and we have the high. Okay? Right here. So I'm going to draw that. And then I want to zoom in on this. Okay? So if we notice here, guys, the 786 of the long Fib. So if we go down to like a 1 minute chart, we could see this in more detail, but I'm not going to go there now. But essentially what it is the 786 is the pullback of this long. It holds. And then we have the extensions trade to the targets. And if you look at in the same sense from the shorts, if we draw the Fib the other way, we're also trying to hold a 786 short as well. So you see, this is a tight battle here on both sides because the risk management is so good. It's so amazing. Look at this. If we have this Fib here, we buy at the 786 with a stop loss right below the low, like so. And obviously we're gonna have the entry you know, a penny or two above the actual level, because sometimes these levels don't get touched exactly because of the fact that algorithms are front running it. But if we want to be conservative, we could buy at the 618, put a stop below the low here. Oop, oh, I got the short one on. Sorry, guys. Let me go back to the long. Okay, so we buy at the 618, stop loss below the low. Okay, and then we take it to the 618 target, and we have a 3-to-1 risk to reward, just like that, guys. See how beautiful that is? This is what Fibs do. They create support and resistance that you don't see on the chart, give you good risk to reward. So it doesn't matter if it doesn't work all the time. What matters is when it does work, you get 3-to-1. Okay? So the first fib of the long traded today, all the extensions were hit, all the targets were hit. So when that's done, when the first fib is already traded and it's hit its targets, now the bigger fib will trade. So if we go here, low to high before the retracement, we see the 382 retracement act as support once, twice, thrice. And then we eventually break out of this range and then we hit the targets. And as you notice, guys, when we get to the 50% in this area, we have a big rejection. Why? Because the fibs are programmed to buy here and sell at this target. Okay. And as traders, what can we do? Well, we can wait and we can see, okay, now we have a double bottom at the 382. That's holding. This is where the support is for today. I'm going to put a stop loss right below the 50, which coincides with this candle. I'm going to take a target at the 50. Okay, guys, that's 3.2R. Amazing. Absolutely amazing. Okay. So fibs give us those areas of support on pullbacks on long opportunities to continue with the trend and give us amazing risk to reward. And as traders, we're going to wait for the confirmation. In this case, we had a double bottom, or in this case, we just had this nice big green candle, and we're going to take it to the targets. Okay. And so to recap, there's going to be 2 sets of fibs trading. So the first part of the day, so like the first half an hour to hour of the day, there's going to be a range and there's going to be a battle between long and short fibs. Once they're done with their targets, then the next fib is going to develop, which is a fib that happens around the noon to 2 o'clock-ish time. And then that is trying to play for the extensions to the end of the day. Okay. So now let's move on to the next day here. And let's look what happened on this day. Okay. So we can draw our fibs from low to high. And in this case, we're going to go to the very high. And we're going to go for the pullback. And we're going to see what happens. So the first thing to happen is, before I draw this fib, let's look at the morning fib before I show the bigger fib. So this is the morning fib right here. Right? So this was the morning. We had this range develop. Okay? And this candle came in with this long wick, went to all these Fibonacci levels. And as soon as the algos got filled, we see that this huge spike creating this hammer candle. So this is the setup for the algos in the morning. So they go in here, they have this range, first 15, first 25-ish minutes. They have their entries here with stops below the low. They get filled, they take it to the extensions, and they're done for the day. Simple. And then we move on to the second level, the longer fibs, for the bigger picture setup to the end of the day. And we see the 786 hold multiple times. But in this case, it broke. So it does not work all the time. But what happens when the long breaks, we can see that the shorts are in control, and now we can draw the short fib. Okay. So we go low to high here. So highest point to lowest point, and look at this. This is absolutely amazing. We get the pullback right to the 50% short, and we trade exactly to the 50% target. So when you see fibs like this, when you see levels like this being touched once and immediately bouncing, this is how you know that fibs are in play, that algorithms are involved. Look at this, guys. Look at this. Who could have said that this would have been the low of the day if you didn't have fibs drawn? No one. Okay? So there are fibs being battled each and every day, long and short. So you have to make the decision which side you want to play during the day, depending on your system. So in a bullish market, we want to look for long fibs, right? But when those long fibs break, like over here, we can draw up the next short fib and take that play. Okay, so how would we have taken the short? We would have entered right here. We got this candle, this inverted hammer would have been our entry, would have stopped right above the high and would have taken it to the 50. Look at that. Oh, that's the wrong one. So let me go to the short. So right here, entry below, stop above the high, take it to the 50. Is this real? Wow. I wish I took that trade. 10-1. Wow. That's amazing, guys. So with a $400 risk, that's $4,000. With a $500 risk, that's $5,000. With a $1,000 risk, that's $10,000. You see, guys, the power of these fibs. So I really hope that helps the point get through. Okay. They are systematic levels that algorithms trade. We wait for the candles because we're traders. We don't know where the algorithms are. But when we see the candle patterns, we know where they are. That is the confirmation. We take the entries, we take it to the targets. Okay? So in terms of which Fibonacci retracement is the best, which targets are the best, it all depends on what you're trading. Every instrument reacts to Fibonacci in a different way. So you have to do the due diligence to go back and test to figure out which ones are the best based on what you're trading. And in some instruments, Fibonacci's will not work at all because there is not enough algorithms involved. But when we're looking at something like the S&P 500, that is 100% traded by mostly bots, to be honest. And in that case, we have very straightforward levels based on the Fibs, okay? So I'm gonna look at this last example here. This was Friday. So we have the low to the high for the first 20 to 30-ish minutes. And we see we have the 786 touched exactly, and we trade to the extensions. And as if you notice, even though we continued higher, when we got to this levels of the extensions, we had some rejection, right? So this would have been an amazing entry at the 786, stop below the low, take it up to the targets. And then, like I said, we had the other bigger term fib playing for the end of the day. And this 50% trades around 1220. And we try to hold it. Look, we can see here, we try to hold, but it just rejects. It just doesn't hold. So it doesn't hold all the time. But when it does hold, you get great risk management and great risk to reward. So for example, even if we don't want to take it to the targets, we could also be more conservative and we can enter on the 50% when we get a confirmation candle. And we could even just go for 1R, right? 1-to-1. We have a high probability level. Could have made 1-to-1 on this. So it all depends on your testing in your system. And then let me draw up the short fib for you guys. So like I said, even though the long is trading, the short is trading as well, right? So right in this area, 618, you see how we have rejection between the 618 and the 786? Rejection, rejection, rejection. So if you were short biased up here, you could have waited for this pullback, short here with a stop up here, and taken your 1 to 2 times your risk, okay? So the last few things I wanted to show you was some other timeframes on how Fibs are trading. So let's go to Disney. So I had the Disney daily chart drawn up for you guys. So we had this low back on the 18th of March. We had this high back on the 26th of March. And as you see, from low to high, we have a pullback at the 50%. Once, twice, thrice it held. Entry here, stop below the low. So let me draw this up for you guys. Entry here, stop below the low, like so. And then we take it to the 50% target right here. That's 4R, okay? So you can use it on any time frame. It doesn't matter, but you need to do the due diligence to make sure that it's actually working on the stocks. And it usually works on the big high volume blue chip companies and indexes because there's so many bots trading it. And then another example I had for you guys was Visa. So let's look at Visa on the hourly chart. We had this low to high, okay? We had this 50% hold 1, 2, 3 times, even 4 times over here. We entry, take it back to some targets. It's on its way still. Or we could just say, hey, we'll take this, we'll take it back to the high and still make good money, okay? And then we could do the same thing from a short perspective. So let me see if I could see a good short example for you guys. So the market's been pretty bullish lately. So in a lot of those cases, the shorts examples are not going to work. But that doesn't mean that you still can't make money on the short side. You can definitely make money still on the short side, because if you're going for a 1-to-1 or 2-to-1 risk to reward, you can still use these levels as resistance to make the money. Okay, guys? So here's another example. So let me make this bigger. Okay. So we had a swing high to low, and we had a pullback right at the 786. We had a rejection. This is your signal to go short, and we trade to the 50% target before we start rallying again. And then when we rally again, we rally, sorry about that, guys. We rally into these previous areas of resistance, and then we trade to the targets again. Okay? So I really hope that this video helped you guys to understand Fibs better. Fibs, even if you don't trade them, you should have them drawn up on your charts, because you can see levels of support and resistance, and you can see if there's a reaction there. You don't necessarily have to trade them, but you should understand how to use them, and you should have them on your charts. And Fibs have changed my trading career and my trading and investing life, because it started off for me with just drawing up these Fibs, and then all of a sudden at the 50%, I see big bounces happening, and I'm thinking it's magic. I'm thinking like I found the secret sauce. But it does not work 100% of the time. But if you can come with a plan and risk management and targets and do your testing, you will have a very profitable, simple system. So I hope this helped you to understand Fibs better. So remember, there are a micro Fib happening within the first hour range of the day, and a larger Fib happening for the midday, going for the end of the day in a day trading context. On the hourly and the daily charts, there are Fibs playing for bigger picture setups. And even on the weeklies, there are Fibs playing for longer term setups. Okay. So have your Fibs drawn. I hope this helped, and I hope this made sense. If you have any questions, comments, please drop them below, and please comment, like, subscribe, and enjoy the rest of your weekend. Thank you.